really our topic here is how to fund entrepreneurs, but it's how to fund entrepreneurs in this ecosystem today, which is very challenging, as we know. The global contraction of venture capital has kind of a feeling of, I wouldn't go to say despair, but at least concern among a lot of founders as they think about runways that are shrinking and a need to raise. So I'm really joined by some prestigious investors here who see a whole range of opportunities from the earliest stage to Series A, Series B with Partech. And what I'm going to do is kind of go down and hear their outlooks for the ecosystem and to hear any advice they have on how you can actually raise funding in this space. So with that, why don't I start with the kind of earliest stage, and we'll ask Amal from 500 Startups to give a sense of what you're seeing and any advice you can give.
I like to be the starter, especially when the energy in the room is still to get up.
You're next.
But I think it is not news to anyone that the last 18 months, Egypt was going through a very tough time. We had a lot of volatility in the market. There was a lot of difficult decisions to be made on top of a globally dry liquidity market. So it was literally a double whammy for us. But that also meant that a lot of the founders that we have today, so we did bring 16 founders to Nairobi this week. Wow. And we're very proud of the founders that we have with us who are exploring. Do we have any in the audience? Yeah, they can raise their hands. Yay, see?
All right, there we go.
Very strong representation of Egypt here in the room. And they're part of our Scale Up program, which is a program designed for companies that are scaling not just within Egypt, but regionally. So Kenya was an exploration trip for us. And what you'll see as you meet, and I hope you meet them throughout the next 2 days, is that the maturity through which they're making decisions. You know, difficulty necessitates that you have to make very tough choices. So you'll find that there was a lot of maturity that came about from the tough decisions that had to be made around where they focus. A lot of investors were giving advice around, oh, you know, you should really add a Saudi slide, and you should add a South Africa, Kenya slide to your expansion because we want to, you know, de-risk Egypt. And that was not working out for a lot of the companies. They're like, this will cost a lot of money that we don't have. We'll spend a year fundraising for growth opportunities that we don't even know we're equipped for or ready for. And the founders that we have today are the ones who had to make these tough calls and push back with investors, push back on market opportunities, and really focus on where it makes sense to take deeper dives. So I think this is what we're seeing more of, where we know the next funding rounds will need to be bigger in order to continue for the Series A and Series B of those companies. At the same time, there's much more efficiency around spending, especially on where you grow. Egypt is still a very large market. The growth opportunity within Egypt continues to be massive. But we also know that you have to, if you are thinking, and it makes sense for your company to be regional, whether that means Middle East or Africa, when do you start and how do you start allocating resources towards that? So we're seeing a lot more efficiency around capital allocation within companies. And honestly, it was good because coming also from investors who are like, we're not going to give you more money, so figure it out for yourselves. And I continue to be optimistic about the maturity that we're seeing in the market and just the resilience that this is showing for us.
So almost a back to basics, which is not surprising, consolidating the base, which is not surprising. Any other advice you have for those out raising right now?
Don't bullshit. We've heard a lot. I think even when you're saying we're expanding X, Y, and Z markets, have very solid reasoning of how you're doing it. And I think there's much more focus on exits and mergers and acquisitions being part of them. So we want to see founders that are already outlining and having the relationships that will lead to those exits. And you know, every investor in the room is thinking about Fund 2 and 3 and we are looking for founders that are aligned with the journey. And so we're also not bullshitting and saying we're here with you forever. We're here with you for a while. Yeah. So let's make that while count.
And so for those raising capital, find those strategic investors early on and think hard about who you could be and where you could be in terms of other emerging market comparables. But honey, let's come to you. Founders Factory is now 54 Collective. Tell us a little bit what you're seeing at the early stage. I mean, you guys have helped create companies. Are you seeing any difference in terms of talent, in the number of startups or ideas you're seeing? What's your kind of perspective?
Thank you for that. So we're an early stage Pan-African company, so that allows us to see many deals, of course, across the 4 major geographies. The way we think about particularly fintech, I think there's 2 areas that we have to acknowledge in a nascent market. One is the ability to build infrastructural businesses, and the second is services on top of the infrastructure. I mean, infrastructure, I mean M-Pesa, the likes of what MS Africa is doing in terms of interoperability. So you find 2 types of entrepreneurs. One that, depending on the region that they come from, they are looking at ways to build more infrastructure layers, which is hard to finance because it needs a lot more money. And the question is, do we have other investors in that entire growth journey to be able to continue to fund those entrepreneurs? The second is entrepreneurs that are building service-based businesses on well-established infrastructures, right? And the question is, what investors early stage and later are interested in funding those services, right? And the question of scale and leading up to exits is very much important. So we see those 2 types of entrepreneurs across the board. And because of our Pan-African presence, the question that we always look for is, how can we enable scale for these entrepreneurs? And secondly, how can we link them up to follow-up investors, right, depending on the stage of those businesses. And of course, for us, it is important to make sure that there's that continuity, and of course, the ability for us to take them from one region to the next with our abilities and the partners and investors that we have built. So we continue to look for those opportunities that can enable scale in the continent. As an early stage investor, I think for us, we wanted to drive investable businesses so that later stage investors can find, or we increase that funnel so that we can see more investors seeing more deals that are well established, de-risked at Series A and beyond. So that is our goal.
And if someone's starting to raise right now, what's your advice to them?
Well, it depends on where they are, where they're coming from. There's a lot of capability that we have built at early stage. So we've built a catalytic structure that provides non-dilutive capital and also equity capital from the 2 instruments that we have. And we continue to look at global investors that, and of course the ecosystem investors that we work with, to see how we can how we can enable those entrepreneurs to find sources of capital. We have looked at dynamic ways as well to raise, from bringing in angel investors to essentially invest into a specific business to further the ambition of. So I think as investors, we have to be innovative in Africa because of the lack of liquidity. And that's why we've gone to look for different types of sources to enable entrepreneurs to find pathways to build their businesses.
So the advice to you entrepreneurs is get him to invest in you. It's a big network and a lot of resources there. Aaron, known each other for a long time. You've been very early in early stage investing in African markets. Tell us what DCG is up to and what you're seeing. I know you're fairly optimistic that good entrepreneurs can still raise.
Yeah, we absolutely still are. Maybe taking a step back, DCG invests globally from Brazil to Indonesia, I call it. Our allocation to Africa over the last 3 years has evolved from 10% to 18% last year. We're on track to 22% of our global portfolio. So, I know we're talking about a funding winter, but there are global investors that are ramping up their Africa allocation. We invest all the way from angel pre-seed rounds through to Series A, and we follow through all the way through to IPOs. So we do have a few pre-IPO positions across fintech, crypto, and AI. I'm still really excited at all that's happening in Africa, and partly because of 54 Collective, because of 500 and the work that you're doing to help founders bridge the gap and handhold them along the way. it's really hard and takes a longer time than most other geographies to build like a great sustainable business, and you need like the right partners like along the way for that. So very grateful for the work that you're doing. We also find that right now in the fundraising environment, you actually get a lot of founders that are really building because they want to solve the problem and feel compelled that this is their life's mission. I think in 21, 22, you saw a lot of founders who maybe were looking at a stage like this and said, oh, people want to throw money into fintech, into payments, I'll start a fintech and get some salary, right? So I think you have a lot more realistic driven founders right now. They're a lot more capital efficient. And we're really excited to continue backing them together with the best sort of funds in the region too, to work alongside. So unfortunately, we haven't, I was just telling Aubrey earlier, we haven't done anything in Kenya for the last like 9 months. We've done 3 in Egypt, so very excited for that economy. But yeah, I mean, I really do want founders in the room to understand that there's still absolutely global capital attention here. I think you've got to be realistic with your pricing of your round. You've got to be realistic with your ratio of like your MRR to your pricing. And you've got to be really clear as to like how much capital you want to raise and what does it actually unlock for your business. Yeah.
And I think, again, with the sophistication of the ecosystem over time, now we're talking the ecosystem is a good 10 years old. You see founders way more circumspect about the type of capital they bring in, and hearing, you know, horror stories from others, and really understanding who they want on their cap tables, whether it's local high net worths or Pan-African funds or people with network or someone more global. I think those are the kind of discussions I'm having with some of the founders. But it is a question of how they can get to where they're going in terms of growth aspirations with the limited amount of money they might have. I don't know, Aaron, are you seeing a change in an adequate change or adjustment in early stage valuations? Because I think the later stage valuations, Series A, B, C, are adjusting, but I wonder if you're seeing it pre-seed and seed.
I think I would describe it as there's still maybe half the founders that haven't really realized that the correction is in place and there's an expectation of a certain price, but I think that expectation is quickly changed 2 to 3 months into their fundraising process, and I think we see some rationality for them to like update that, although not all founders update their valuation and the round doesn't close, and I don't think anybody wins that situation.
Right. Loam, I want to come to you. I mean, Partech is a later stage investor than some of us on this stage. And obviously all the companies that we invest in, we need you guys to carry them on. And I think that's one thing founders always have to keep in mind, that you're on a long journey. And there's many stages you have to walk, and you have to think about step after step to make sure you can get to the last one. So Loam, what are you seeing at Series A and B? And are companies realistic? Are we seeing more distressed opportunities? What's your outlook?
Yeah, it's a good question. I think last year was a bit of a difficult year because we were still kind of reeling in terms of adjustment to the global shocks. This year has been a bit more stable in terms of the opportunities in the market, and then also we have, to your earlier point, a lot more sophistication than we used to have. So now there's a lot more later stage funds that are Africa focused than there used to be. So there's quite a bit of capital that our ecosystem's actually not used to having at Series A, Series B. And I think that, if anything, is cause for excitement and also some kind of deference of like the future of where Series A, Series B in Africa is going to land. So to me, that's a big silver lining. I think there's been kind of a similar split to what Aaron was saying, where there are people that were quicker to adjust to the market expectations, and when the multiples kind of dropped globally, both in public and private, there were entrepreneurs that navigated that quite quickly and successfully. And then obviously there was entrepreneurs that struggled with that reality, which to some degree we understand, because especially if you're a first-time entrepreneur and you've only ever existed in a boom market, existing in a bit of a bust or a correction takes time, and adjusting to that reality takes time. But I think it is a sign of a good entrepreneur to be able to read the room and navigate that quite effectively. It's been interesting because there have been quite a few opportunities coming into the market also that have some level of distress, and there's different levels of thought about whether or not to do a distressed deal. What I would advise the entrepreneurs in the room that are thinking of navigating their next raise, I think the market at this point is at a good moment to raise. If you have to take a correction, even if it's painful, take it. Waiting too long to the point where you're in a place of distress just to maximize valuation can be quite dangerous. And we've seen it kind of not work out for a few companies. So I think just being strategic about what your needs are, where the market is, doing your own research even on multiples to try to understand what's a fair valuation and how do you make the best of that situation and something that works for you is great. But I think it's also a reminder to the earlier stage companies when they're raising, back when money was not free, but kind of free.
Easier.
Yeah, easy. And everyone's raising at super high valuations. Again, it makes sense to have taken that money, but at those valuations, they weren't necessarily justified, right? So I think it's also a lesson to early stage founders to be a bit conscientious about, okay, what makes sense for me at this stage so that I can level up at the next, and so that I'm not kind of dealing with a valuation issue later.
Yeah, your comment about, don't wait too long, like don't wait till you're distressed. I mean, I think that's so true on so many things, right? The famous management adage, fire fast kind of thing. Same when you're starting, when you realize you need to cut costs, probably you needed to cut your burn like months ago. So, preparing and reducing spend is very important, and you never do it early enough. That's been in my own businesses as an entrepreneur as well. It's coming, but you don't do it early enough. So I think that's an important piece of advice for those in the room, is to be very conscious of your burn, that this is a long walk, and you will need to raise again, and you need to do so at a time when you're not distressed, because it'll be a very different conversation. Noura, I'd like to come to you. I mean, part of your existence is to, promote an entire ecosystem here in Nairobi. And so what are you seeing locally, and how do you think all the pieces can work together to continue to sustain growth in this ecosystem?
So within Nairobi is focusing on tourism, business, and investment. A key focus area of ours is being able to work with SMEs, particularly in Kenya, and being able to also connect them with funding opportunities. I will say from an ecosystem standpoint, what we've witnessed is that there is a lot of opportunity in the market, particularly in Kenya, and there's a wide range of different areas you could invest in. But for SMEs, we're really looking for SMEs that's taking the approach of being not trying to raise too much capital, and also being more sustainable, like taking the camel startup approach, which is being able to really focus on building their operational systems, being able to really create the right way to market themselves and so forth. And we've also seen that investing a certain amount of capital, let it be something as small as $50,000, can have a huge impact, or even $100,000 have a huge impact for an entrepreneur or even a SME, rather than being able to intake a huge amount of money. And I think that when you look at the startup space throughout the continent, we realize that a lot of the startups, they need guidance, they need mentorship, they need access to resources and tools, and funding is also a key component of that. So for us, for some of the SMEs that we are actually actively working with, we're looking at how do we make sure that we're helping you scale and grow, but in a way that's more steady, and also giving you the opportunities from a tools and resources standpoint that you can grow.
Yep. So listen, I just want to take advantage of the fact we have such amazing entrepreneurs on this panel. We're going to take 3 questions, if there are any questions, any entrepreneurs, and then we'll quickly go through and we'll get done in less than 10 minutes. Go ahead. We can hear you yell. White t-shirt, let's go. Come closer. It's a small group. We're intimate. Let's go. What's your question? Here you go.
Okay, thank you for the opportunity to ask the question. So my question to this panel, what are the key specific features are you looking in a pitch deck for startup founders?
Okay, great. Let's take two more over here. Let's go. You're going to hand him the mic right behind you.
All right, thank you so much. Such an amazing section. Thank you so much. My name is Treasure David. My question basically is on your valuation as a startup founder, right? You know, especially at early stage, it's quite difficult for most founders to be able to put a hand on what their valuation is. So as investors, I'd really love to know what would be your counsel to founders at early stage trying to kind of pitch their valuation, right, at a high level, and what would be your best bet, right? Yeah, for that.
Okay. Any last question?
Hi.
Okay, well, one more.
Yeah, hi, Newbie here. Back in the boom, if you want to call it that, you see decks and it says, oh, we're going to raise this money and go into 5 markets or 3 markets. It's never 1 market. And now there's that almost shift to staying in market. I'm curious as to what you're seeing and what your perhaps advice would be for founders who are raising now. Are we going back to the multi-market kind of like go-to-market, or is it about just raising and focusing on your local markets?
Okay, we're making an exception. This last guy, and then we're going to rapid fire these.
So I think in African tech, we've realized there's been a bit of a delay in that tipping point from migrating from old tech to new tech, that inflection point. So what are some of the factors that you think will be key in leading to that kind of S-curve inflection point in the next 5 to 10 years?
Okay, well, thanks for everyone asking real questions. So one of the questions was, what are some qualities you look for in an entrepreneur? Aaron, I'll jump to you. Qualities in an entrepreneur. And then we'll come to Amal and Bahale on any resources you give your founders on valuation and thinking about that. So first, entrepreneurial qualities.
Sure. I think clarity of vision, at least of like the problem you want to solve, is important. I think we really love backing entrepreneurs that have done it before. I mean, a lot of second-time, third-time founders find it really easy to get backed, but how do you get first-time founders backed? I think a lot of it is also the spark in your eye. Like, we want to see you excited about the problem. We want to see you obsessed with the problem. We want to see you having read a lot, listened a lot, and it really comes through. So I'm guessing a lot of people in the room are sort of first time and pretty early stage. So I think that's also great to demonstrate. And yeah, I guess like a team that can truly execute on it.
Execution.
And have evidence towards it, right? Mm-hmm. Don't say I can execute and then you have to believe me, but why should I believe that you can execute?
Okay, execution is critical. Lots of ideas out there without execution. Resources on valuation or any qualities you look for in a founder? Mahali.
I think I just want to align to Aaron around quality of vision. We have a very simple mission to basically say that we want to help entrepreneurs to build without boundaries. I think that Africa needs bold, visionary founders. And the problem with Africa is these lines that we see in between us, that in many ways it actually takes an African entrepreneur to think about the local market and not think about Africa as a holistic customer base. For the most part, we're facing the same problem, and yet I'm building a solution for Kenya, and I'm expecting to build a global business that can get to a $1 billion. The main reason why we don't have unicorns in Africa, or at least 10 unicorns in comparison to other markets, is because of the services that we need to be providing and advice to entrepreneurs as investors. We need to help them to think as Africa as a customer. Yeah. We are facing the same problems. So we at 54 Collective, when we take a view of helping entrepreneurs to build without boundaries, is uplift your mind from the fact that you are in a local market and think about Africa as a market to scale. And the question is, how do you build a product that can serve customers, that can get to massive scale quickly? This idea of founders need to save money because there's a funding winter. It's one that I don't think we should subscribe to, because VC suggests that you need to build a scalable business quite quickly.
Yeah.
If you have 100 customers, how do you get to 1,000 in a short space of time? Is it money? Is it resource? Is it distribution? Let us help you to do that as VCs, to build scale quite quickly. If you die, it's okay. Go to your next business. That's what VC is all about. It's not about saving money.
Yep. Amal, any resources on valuation?
I think 500 has great resources on valuation, so I encourage you to take our programs. But to take this a step further, I think honestly one of the things that I personally have appreciated over the last 2 years, again, as the market was going through a downturn or through tougher times, is the importance of educating ourselves. So I love that there was eagerness from founders to join programs such as 500, and there are many great programs around the world, wherever you are, YC, others. Because it's a community of founders that you can learn from. The resources are there. We don't need to reinvent the wheel. That said, what we do need is localization. So, sometimes founders are throwing numbers, and I'm like, do you know which market you're operating in? Like, look at the Egyptian Stock Exchange. Here's the EGX. Here's how much these companies IPO'd for. Here's how they're trading. Why do you think your valuations would be such today? Because how are you going to exit? How are you going to exit on whether it's the London Stock Exchange, whether you're thinking Dubai, whatever it is. I think also working it backwards and shows me that you have that long-term vision of where you want to go next.
Yeah.
And you're not solving for a number today that's defining who you are. Valuations are not your net worth today. Sorry to break it to you, these are still on paper, but I see so much emphasis from founders who identify with their valuation, and it is a recipe for disaster because, as my colleague from Partech said, we have seen founders, shoot themselves in the foot by solving for too long, too much for valuation, and unfortunately not raising what they needed to raise earlier on to grow into what their true potential is. So I think, you don't want to dilute yourself too early. Absolutely, we do want you incentivized throughout the long run. And I want to see that you are reasonable on that long run looks like, what you intend to exit at, that you are aware of other market fundamentals and where you're trading at.
And I want to come to you last here, just on any comments about the pressure, and I agree with the guy who asked about being in multiple markets or your home market. And in a currency downturn, you want to be diversified, but at the same time, you want to be strong in your base. So how do you see that tension? And then that scale moment, the S-curve is his question. So any last thoughts there as we wrap up?
Yeah, it's a great question. I think the expansion pressure is definitely valid and has been really, accelerated in a lot of ways with all the currency instability that happened. I think a couple of years ago, everyone was saying, I'm going to be in 5 markets, I'm going to be in 10 markets in 2 years. Very unrealistic expectations. I think, unfortunately, at the time, everyone was valuing Africa as one market rather than several. So that was a mistake. What I'll say is, you don't want to expand before something is working in your home market. You don't want to expand just to expand. Expansion is very expensive, and it takes quite a bit of time. So if you tell me, okay, I'm raising this amount of money to try to start the process of getting a license in XYZ country, it's working in your home country, you see a lot of potential in these additional countries, you're realistic that it's going to take years for these to take off, so you need to start the processes today, and you're not spending too much of your proceeds on that, then I would understand. I don't think you need to go after the entire continent at once. For certain verticals, it makes sense to expand quickly, for others it doesn't. And the last thing I'll say, it also depends on your home market. If your home market is large, you can spend more time there. If your home market is small, there'll be pressure for you to expand earlier. So navigating that is effectively quite important. But always make sure it's working in one market before you're trying to replicate the playbook in another. I think that's the mistake a lot of companies made by trying to expand too fast. And then on the S-curve and long term, how do we get to the next level of technology? I think it's the proliferation of smartphone financing, cheaper smartphones, cheaper cost of data and data infrastructure and internet infrastructure. I think that's going to be the biggest contributor to getting us to that next level of growth in technology across the continent.
Yeah, and that digitization is what we're all part of in some way, shape, or form. Those were great questions. Those are real questions. I hear them all the time about valuation, which is a negotiation at the earliest stage, but there's a lot of resources out there. Secondly, the qualities. I would love to even spend time with all of my friends on this panel discussing that very thing, because even in my fund, I look for different things week by week, I swear. Every time I think I figured it out, it's personal quality, it's some other quality. And then looking for this tension between diversification and market dominance. It's a challenge, particularly in this region. So good questions, much more to continue, and join me in thanking this wonderful panel this afternoon.